Alright, hello and welcome to Camel Finance. I'm your boy Camel, and in today's episode I've got some Bitcoin news to show you. I've got a bit of crypto news in general as well. I want to briefly touch on some Bitcoin charts, but then from here onwards I mostly want to talk to you about the case for the bearish outcomes in the stock market and the traditional markets, and I want to talk to you about this scenario here, which in my opinion continues to be validated, this melt-up thesis. I know it's not a popular one and people get quite annoyed with me when when I say that I think we're going to new all-time highs by Q1 of next year. A lot of people get really annoyed about this. I'm not saying I'm certain about this, but this is what I want to discuss. I want to talk about China because there's some interesting things happening in China. I also want to talk about inflation because we're exactly 2 weeks away from the next CPI print, December 13th. So I want to go through that, global money supply. Finally, I'm going to finish on this fractal, which kind of validates my thesis. Maybe I have confirmation bias. We'll get into that and then some charts and look at the trades. So if you're into that sort of thing, sit back, relax, hit that like button, and let's get into this. I want to start today by pointing out that there has been a couple of influencer shill leaks come out. So there's all these names here. I'm not trying to name and shame anyone, really. I'm just trying to point to this and say, you will never, ever, ever catch my name on any of these lists. I promise you that faithfully. There's another one here. And again, you can go and check this in your own time. But the horrible truth about Bitcoin and crypto YouTube is these influencers, they're not traders, right? They don't make their money from trading. They don't make their living from trading. Instead, they make their living from doing this, okay? So because I don't need the money, because I'm a trader, you will never catch my name on this, okay? So I hope that I can contribute some sort of value to your life instead of focusing on these shills and these paid altcoin promotions. I'd rather just show you exactly how I look at the market, how I come up with these sorts of theses, how I look at things like inflation and the macro backdrop to try to make a profit in the markets. And most importantly, I show you all of my trades in real time and I call them weeks ahead of time, weeks and weeks ahead of time. You can go back and see every loss I've taken this year I've posted on this channel, as well as every gain. So anyway, that's what I'm trying to do with this channel. I'm trying to uphold a higher standard of content creation on YouTube because frankly, just shilling these altcoins and then getting paid to promote an altcoin that you know is going to zero and you know your trusted followers and subscribers will buy because you told them to is frankly really quite disgusting, isn't it? So anyway, that's that. BlockFi have just filed for Chapter 11 bankruptcy, so it shouldn't really be news to anyone by now. This has been announced for a number of weeks, but is officially confirmed as of yesterday. The Bitcoin price doesn't seem to really care about the BlockFi thing, but like I said, because we've sort of known this was coming for multiple weeks now, so I guess this was somewhat baked in to the price action for Bitcoin. Of course, we will go and get into the charts a bit later on in the video. Taking a look at the Bitcoin price here, you can see that when we had this Bitfinex crash, that marked a capitulative low before a run on to $500, the first time Bitcoin had made $500 a coin. And now, fast forward to today, and we've had potentially the same sort of pattern play out with FTX. Are we, therefore, going to be working our way towards a parabola over the next couple of months? I think we will, but that, of course, remains to be seen. Fidelity, the financial giant, has officially opened retail Bitcoin and crypto trading accounts. So Fidelity now offer Bitcoin and crypto, and these are commission free for retail accounts. So this is adoption. Fidelity have something like $4.5 trillion of assets under management. So this is an enormous company, and this is enormous potential for inflows into Bitcoin over the coming weeks and months. I think it's safe to say the dollar has topped. Game of Trades here is illustrating that we've had a higher high in price and a lower high on the oscillator, and therefore we have this bearish divergence which is confirmed over a massive monthly time frame. We've also, and I'll get to the charts in a bit, likely seen the top. I showed in yesterday or the day before's video that Bob Lucas, the king of cycles, is also calling for the top in the dollar and expecting a 12-month drawdown period for the dollar. I think this is going to be the main and primary fuel for the melt-up thesis that I'm going to get to in just a second. In addition to the dollar breaking down, fueling this rally to new highs, I think the bearishness, since it's the dominant sentiment, is also going to be the fuel. We can see that there are just no bulls left in this market. The amount of puts are completely off the charts. They're at record highs. This is all fuel. This is the sort of thing that fuels major upside rallies. Yesterday, I saw what I would categorize as rookie interpretations of the market moves. I'm not saying that we didn't just top yesterday, but what I am saying is it's too early to tell. It's definitely too early to tell. I saw bears all over Twitter and all over the place yesterday, high-fiving each other. That's it, tops in, bear market rally's done with. But this is just simply a rookie mistake to be making these sorts of calls this early. Also, yesterday, the headlines were completely dominated with China blowing up, and this is the reason for the pullback yesterday. And even today, we're seeing European markets choppy as China's policy is taking center stage. They're also telling us the stock futures rise after major averages slide after the C19 unrest in China. Every dip has its narrative, right? Again, I'm not saying that we can't possibly have topped yesterday, but what I am saying is it's too early to be celebrating. It's too early to be going short. The average investor is going to go short here. They're going to sell everything, and they're likely going to be caught offside. I've been showing this melt-up scenario all the way since back here, and so far, so good, as far as I can tell. Now, are there some hurdles for us to climb? Yes. Can this still fail? Yes, of course, but it hasn't failed yet. We know that we are likely to expect a 50 basis point hike in the coming future. Now, I've been seeing the Fed start to hint that maybe they're going to continue to do 75s, maybe they're going to be more aggressive. That remains to be seen. But as a trader, as a swing trader, I follow price, and price at the moment is still heading along this line like I thought it might. Yes, the Dow yesterday was down 500 points, but when I zoom out and look at this chart, it's still very difficult for me to see anything other than a breakout, retest, and a resumption. We are still making higher highs and higher lows, and it's far too early to start saying, aha, that's the end of the bear market rally, we've topped. Now, could we expect a pullback, a deeper dip than what we've experienced already? Yes, absolutely. But to be 100% sure of yourself that that was the top and now we have to come all the way back down to test the lows or take them out is simply a rookie mistake. It's far too early to do that. We need to at least take out this low back here before we can even entertain lower numbers. Whilst I'm in this chart, I'm just going to hop into the VIX because I said yesterday as well, the VIX, it spiked up, okay, right into resistance, but it didn't break it. It didn't break it. We are still not long the VIX. We're still patiently waiting. Could this roll over and come out and come down here and take out this low and make a new low? Yeah, absolutely. Everything is on the table. This does not speak to the end of the world just yet. Blockchain backer, I got a lot of respect for this guy. He has pointed out that we have reached the 702 retracement for the Dow Jones, and he is saying that he is on depression alert, Great Depression alert. So does this mean that we have to top here? No. But does it mean we couldn't top here? No, of course not. This is the kind of thinking that I am cautioning against. That does not mean we could not roll over from here, but I just think don't be too sure of yourself that there isn't a blow-off move left in this. The emerging markets and the Chinese stocks are rocketing higher. They are the canary in the coal mine. They are the early warning sign. This would not be happening if we were about to roll over and take out new highs. These would be leading on the downside, and instead they're leading on the upside. So why is it that they're leading? This is because the market is betting on President Xi surrendering to the mad public over the recent nationwide protest. China will be reopened. Xi will give up on the zero C19 policy, and the S&P 500 will catch up due to this lower dollar. We're also seeing in the news now, look, reopening bets are propelling Chinese markets to the best month in years. Okay, again, I know it's very easy to look at the bearish narrative out there. I know there's 1,000,001 reasons to be bearish, and I have said this before and I'll say it again. I agree with those reasons, but you have to follow price, and price is telling us we're going north. We're also seeing headlines like China is talking about easing its lockdowns amid public anger over a deadly fire, amongst other reasons. So again, we know that quite likely we're going to see them reopen soon, and certainly if that happens, the prices are going to go up, not down for the stocks. In addition to this, we are exactly 2 weeks away from December the 13th today. And what happens on December the 13th? US CPI data is scheduled to be released. Can we get a 6th month in a row of lower CPI, of lower inflation? If we can, then risk is going to come on even stronger than it did at last month's reading. And we can see here the complete collapse in the growth rate for M2 money supply. Year-over-year pace is now the weakest since May 1995. They've completely switched off the printers. There is no more inflation. That is not to say that longer-term inflation is not going to get completely wild. If I hop back into my chart here, you can see that I'm calling for, once we've had this blow off top, I'm calling for the biggest deflationary bust since the Great Depression. I've said here, when the market finally reaches its lows, which I think will be way down here, the Fed is likely going to launch a record amount of QE, 10, 20 trillion, maybe even more. This, with a lag, will be ultra inflationary. But at the moment, at this very moment in time, they are not printing money. They have stemmed the M2 expansion to almost zero. And this tells me to expect a CPI print in 2 weeks' time below that of last month's, significantly below that of last month's, in my opinion. And if we can get that, and of course it is an if, because if it's a hot CPI print above last month's, then all bets are off. The bears are going to get happy. They're going to get their new lower lows, and I will be completely wrong about this. But that is not what this chart tells us to expect. This chart tells us to expect another cold CPI print, that is to say, a CPI print below that of last month's readout, and therefore risk will come on strongly. Risk will come on strongly because the Fed will be able to start to say, look, we've done it. We're starting to achieve what we wanted to achieve. Inflation is moving down towards our 2% target. Unemployment is increasing. Everything is under control. There is, of course, a massive uptick in global money supply coupled with China reopening. This will boost risk assets to all-time highs. I know people have been saying, where's the money going to come from? Well, the money's going to come from three places. One, from the global money supply increasing. Two, it's going to come from the record amount of puts and shorts and hedges in this market not believing this rally, being forced to cover their positions. And three, it's going to come from FOMO. As we start to get to the all-time high and then eventually take out this all-time high, people are going to be left with no choice but to chase this rally higher. How can you be bearish when we're at new all-time highs? People are going to be like, wow, I was completely wrong. I was completely wrong. There's no recession. Everything's fine. They fly in here. They FOMO pump this to the top. And that's finally when we're going to go full Great Depression, Great Reset. In case you're wondering, I just thought I'd clear this up. In case you're wondering how we can have the money supply expanding whilst inflation is coming down, this is because CPI lags the expansion of the money supply by, on average, roughly 12 to 18 months. So this could start to increase, but we won't actually see that reflected in the CPI data for another 12 to 18 months. And continuing on with this melt-up theme, here in yellow you can see overlaid is the fractal from 1917-ish through to 1932, the Great Depression. And it's overlaid on the current Dow Jones chart from the late 90s to the present day. As you can see, we have completed this chop. All that's left to do is to have this final blow-off move. Now, I found this fascinating. This has only come out, it's only been posted from James here today. This has made me think that my melt-up thesis here is even more valid. I had not noticed this fractal before here. I had not seen this before. But to me, this says that it would not be at all out of the question to expect this melt-up. And like I say, couple that with the fact that the dollar has indeed topped. Here's a dollar chart for the 3-year cycle, as I showed in yesterday or the day before's video from Bob Lucas. We've had a 2-year uptrend. Now we can expect a full year of downtrend. The dollar in decline is always good for risk assets. Couple that with the record amount of puts and shorts and hedges getting set on fire. Couple that with the bearish sentiment that people will continue to short this rally as it bounces in the stock market. People will never believe this. I think the last couple of pieces of the puzzle are to get a slowing down of the rate hikes from the Fed and to get CPI continue to come off, and we will see this melt-up thesis play out. It's definitely too early to be celebrating. I've been saying this over and over again. The Dow off 500 points yesterday. Not the end of the world, remember. Not the end of the world. Certainly doesn't invalidate the melt-up thesis, but I am open to trading both sides. At the moment, however, it's incredibly difficult for me to be bearish with the sorts of things I'm seeing in the markets. Taking a look at the dollar cannot catch a bid. Now, could this be a double bottom that resolves higher? Yes, but it hasn't done that yet. The same is true of these 10-year yields. Look, I call this the chart of truth all the time. The chart of truth is bleeding. Okay, this is not a bullish look at all. Very hard for me to say that we're entering a risk-off period in time. That's not how I see it. Geo continues to perform, so I'll continue to push this trade. Bitcoin is still thinking, isn't it? It's still thinking that maybe it's going to recover this level back here, this low from the summer. Maybe it's going to validate the Wyckoff spring. Let's go to the Wyckoff chart. Here it is. So is it going to recover this Wyckoff spring? Is it going to look more like this? That remains to be seen at this moment in time, but I would not be surprised to see this resolve higher over the coming couple of weeks. Once it does, and we can start to get some bullish action out of the Bitcoin price, then I will be more than happy to start trading some of these cryptos again. Looking at gold here, breakdown of the dollar should be good for gold. So see if we can continue to push this trade, and it should also be good for silver. So see how this goes. Could maybe redraw these lines here if you're not in already. There's another trade idea there for you. Again, take a look at the UK 100, okay, the FTSE 100. The FTSE 100 is currently a mere 160 points from its all-time high, okay, from its 52-week high at least, right? So how can you look at this and say bear market rally? This does not look like a bear market rally to me. Now, that again, that doesn't mean we couldn't roll over from here. That doesn't mean we couldn't have a sharp move down. But at the moment, the trend is up and continues to be up. The VIX continues to be held down by this resistance line here. So I don't think it's time for the bears to be high-fiving each other just yet. The Dow Jones, as I've shown, still kind of structurally bullish. The Nasdaq is still lagging. We are back below this green level here. This green level is very important to me. I want to see this hold, but as of right now, not the end of the world. And looking at the S&P, again, we're still making higher highs and higher lows. So we could easily take out this low back here, and then we could start to call this structurally damaged over the coming days and weeks. But we haven't done that yet. Futures are slightly green this morning, so we'll see if we can get a turnaround Tuesday. If we can, and you're a bear, then I would really highly suggest reevaluating your positioning. If we start to get redder and redder throughout this week, then perhaps the bear case has to be entertained more closely, but particularly if this becomes a very strong close today, particularly if we start to just wick up out of here and start to press on and continue this uptrend for the Dow and the S&P, then I would be significantly concerned if I was a bear. If you found value here today, I'd appreciate it if you could drop a like on the video, subscribe if you're not already, and turn the notifications on if you want to see how I deal with these markets in real time as a pro swing trader. If you have any comments or any videos you want me to make, throw them down in the comments. In the meantime, enjoy your week, trade safe, take care from me. All the best. Cheers, bye.